शर्मा अमेजिंग, दोबारा एक आईसीसी चैंपियन ट्रॉफी जीते हैं और इसके लिए पूरा श्रेय जाता है रोहित शर्मा को और विराट कोहली को।
आज हमारी दिवाली है।
वंदे मातरम, माता की जय।
Well, the wait is over and our boys have done it. Rohit Sharma, Virat Kohli and company have lifted their third Champions Trophy title in a spectacular fashion. It was a nail-biting final. India edged past New Zealand by 4 wickets, successfully chasing down the 252-run target with 6 balls to spare. The best part, it was a complete team effort with contributions coming from almost every player throughout the series. And amid all the celebrations, Rohit Sharma has put retirement rumours to rest as well. The Indian skipper made it clear he's not going anywhere and will continue playing ODIs for India. Well, that's the story from the cricket ground. But what about Dalal Street? Hi there, I'm Nandita Khemka. It's the start of a brand new week, but we need to see whether or not the Bulls will join the celebrations as well. Because we did see some fireworks in the run-up to the finals with the Nifty surging 2% last week. But the big question, will the momentum continue or was it just a one-off? Well, on that note, let's quickly take a look at the top headlines before we delve deeper into what the technicals are saying and what are the stocks that will be hogging the limelight in the trade today. The headlines then. Wall Street snapped its biggest weekly loss since September. Investors remain wary of uncertainty surrounding President Donald Trump's tariff policies and digested lower than expected payroll additions. Asian markets trade mixed after a volatile week around the world. The GIFT Nifty is indicating a mildly lower start for the Indian market. Brent crude prices hover around $70 a barrel mark as concerns about the impact of US import tariffs on global economic growth and fuel demand cooling investor appetite. Gold prices ended with the week with gains on safe haven demand. And Finance Minister Nirmala Sitharaman says GST rates are set to drop further. The government is very close to finalizing its stance on GST rate and slab reductions. Well, just about 7 minutes to go for the markets to open, and it is looking like we are, staring at a flattish to negative start on the Dalal Street. Quickly recapping last week's, action. Then it was the biggest weekly gain of 2025 last week. The market, did outperform US markets. The Nifty, in fact, snapped out of a 3-week losing streak. It was up 2% for the week. The Bank Nifty, however, relatively underperformed versus the Nifty. There was a big move in the broader markets. In fact, that helped the mid-cap index surge nearly 3% for the week. All the sectors ended with gains last week, and Metal Pack, that was fairly active. That was really shining bright last week. A 9% uptick on the metal index for last week, and in fact, even PSU names were among top gainers. Nearly 40 stocks recorded gains last week on the Nifty. Bharat Electronics, Tata Steel, BPCL on the back of Crude Comfort, Hindalco, Adani Twins. These are some of the top Nifty gainers for the week last week. And if you look at Friday's action in particular, we did manage to hold on to that 22,500 mark. It was a fairly range-bound day on Friday. Reliance Industries saw big moves for a second day on the trot on the back of positive brokerage notes. Bajaj Auto, Hero Moto, these also saw some bit of buying interest following the recent underperformance. Of course, metal names on the back of positive global cues in terms of the cool-off in dollar index also helped the metal index last week. Tire stocks were also moving higher because of the big drop in crude prices as well. But aside of that, if you look at the options cues, the Nifty put call ratio dropped to 1.08 vis-a-vis 1.14 in the previous session. One stock has been added to the FNO ban list, that's Hindustan Copper. Manappuram Finance remains in the futures and options ban. Foreign inflows, or in fact foreign investors continue to be net sellers They sold stocks worth 2,035 crores in the cash market, but of course the sell-off has kind of slowed down a bit. Investors will take heart from that, but DII buying support continues. 2,300 crore worth of stocks bought in the cash market. But on that note, quickly bring on board our guest for today. Joining me, Sudeep Shah, Head of Technical and Derivative Research at SBI Securities. Sudeep, incidentally, last time we spoke, India had defeated Pakistan, and this time around India has in fact won the Champions Trophy. We always tend to connect on days when we have good news from the cricket ground. Your thoughts, how happy are you?
Morning, Garisha. I am as equal as happy as 140, 150 crore Indians are at this moment. Can't express my happiness in words. And see, while we talk about consistency in markets, about good stocks, good portfolios, here the Men in Blue has shown exemplary consistency. Now, if you see the 2023 World Cup, then the 24 T20 World Cup, as well as this all these matches of Champions Trophy, if you put together, the total number of matches that they've played is 23, and they've won 22 out of that, barring that one odd final against Australia where we lost in the World Cup. So it's an amazing consistency in all these events, where it's a marquee event. It's just not any event between two nations. It's a World Cup and 23 matches, winning 22 out of them. Can't have better results than that.
Sure. What do you think? The celebrations will extend to the Lal Street as well or not? Because the bulls were active last week in the run-up to the finals. We saw 2% gain on the Nifty. In fact, the Nifty is just about 1% away from its 20 DMA of 22,748. This week, do you expect the Nifty to make a dash at that?
Yes, I do expect the Nifty to make a dash at that, but I feel there could be still consolidation, because last time around when we were talking, we were closer to this 22,050, 22,080 mark, and we expected 21,750, 21,800 support zone to hold because of a lot of reasons. It was an oversold market breadth parameters, long short ratios, and the host of the reasons, and the pullback has materialized. And the reasons were dollar index, Brent crude, and there's no change in those variables. Now the dollar index is still weak, Brent crude is still below 70. So I feel this rally, this pullback could extend, maybe because of the global handover. The Wall Street was not positive, bearing a couple of Asian markets. Rest of the Asian markets are also in the negative. So we might see some kind of a red, some kind of a consolidation. But yes, the texture is improving, and I feel mid caps, good quality large caps as well as mid caps could still continue to find some feet, and some rebound move can extend in these names also in the coming week.
Sure. Let's talk about the Nifty Bank Index as well. It underperformed the Nifty last week, but that has not been the case. If you look at the both the indices on a YTD basis. But today, I want to get in your thoughts on where the Nifty Bank Index is headed, because in the pre-open we can see that it could start with a cut of 0.5% or thereabouts. But the big stock to watch out for today will be IndusInd Bank, given the fact that the RBI has given extension for the CEO just for 1 year when they were seeking for 3 years. And we have some brokerage notes as well on this particular development. Although brokerages have maintained their buy rating, but they've said that there is uncertainty with respect to CEO continuity beyond 1 year, and that is expected to be an overhang for the stock. Of course, it could allow RBI more time to explore alternatives. That's what Citi is saying. Jefferies also has a buy call. Target price also has been cut to 1,080 rupees vis-a-vis 1,200 rupees per share. And they've said that the approval for 1 year term to CEO could drive the company to start succession process sooner than later. In fact, they've also pointed out that the deputy CEO and the CFO Arun Khurana could be a key contender for this post. Your thoughts on IndusInd Bank? I think this bank had seen good buying interest, but right now in pre-open, I can see it could be, in fact, the markets have opened up. Let's quickly take you through what the markets are doing, and then we go to Sudeep on what to expect from on an IndusInd Bank. But looking at the open, the first ticks are negative, of course. It's pretty much flat territory for the Nifty. 22,565 is where it's at. just about 15-16 points higher at the current juncture. Quiet start. The mid-cap index, however, continues to see good traction. 0.7% kind of gain coming in on the Nifty mid-cap index. The advanced decline ratio also as of now in favor of gainers, almost 2:1. Look at the bank Nifty, no big cuts, just about flat but trading with a negative bias. I want to quickly see what other sectors are doing then, which of the sectors are taking the lead. I want to see what the metal pack is really doing in particular, because that was the big winner with a 9% gain last week. So, metal pack, yes, extending gains, 0.5% gain coming in there. You have Pharma doing well. PSU banks have taken a bit of a breather. The RailTel pack also trading with mild gains. So, mixed picture when it comes to sectors. Auto pack also under pressure right now, 0.5% lower, and so is the FMCG pack. So, if you look at the sectoral picture, metals doing well, Pharma doing well. Sun Pharma has been a newsmaker. We will see what the stock is doing, but autos, banks, FMCG, IT, PSU banks, all of these sectors are trading with cuts at the current juncture. In terms of individual movers then, just want to see what IndusInd Bank is doing. I think it's down somewhere around 4.5%. Yes, top Nifty laggard on the back of CEO uncertainty over the CEO tenure, because Sumant Katpalia has got extension for 1 year, wherein they were seeking an extension for 3 years. M&M, that's the another top laggard on the index. Bajaj Auto, Trent, L&T, NTPC, ITC, Apollo Hospital, Titan, Wipro, Maruti, these are some of the other laggards. What's doing well is Bharat Electronics, that's the top Nifty gainer, up almost 1% or so. Bajaj Finance, Sun Pharma has made an acquisition, that stock is up and about. You have Bharti Airtel doing well, Axis Bank from the banking lot, although other tech names are under pressure, HCL Tech is holding out, and some of the metal names like JSW Steel continue to see buying interest. BPCL also among gainers. Crude, although, has inched up slightly, after falling to 6-month lows. It's around that $70 per barrel mark right now. But looking at the open, let's talk about IndusInd Bank first. Your thoughts on this stock, how it's poised, because it's 5% lower as of now. Top Nifty laggard at 890 or so. Your thoughts as to which way the stock will head from here?
Lavisha, just I feel looking at the stock, it's just one way, and that's down. The reason is that there was around 7-8 weeks of consolidation where the stock was holding 940, 950 levels, and it was not breaking down. But this current, the news of the extension for only 1 year as against this 3-year requirement or request, now that has not gone well with the markets, and I feel it's going to get a bit more weaker for the stock. And if you see right from April, May 2024, where the stock was at 1500, 1550, and there was a big cut in the month of October of around 25-30% due to that bad news. So the stock has been underperforming since then. The Bank Nifty has still not underperformed in that way, but against the index, the stock has already underperformed, and we feel that it's better to avoid until and unless any credible reversal signs are visible. Just for a couple of percentage points from a trading perspective, also one should avoid this stock. Many better stocks are available even for trading also. So I would give this stock a miss. If anyone is even thinking, I would just tell them that 930, 940 levels are the first levels signs of any minor reversal. Also, if it all it has to come. So 930 will now act as a resistance on the upside, and we are looking at lower levels of around 860, 840 in the coming weeks to come.
What about Sun Pharma? It has made an acquisition, and on the back of that, the stock is doing well. It's among the top Nifty gainers. If you look at the last 1 month chart, it has seen some bit of pressure. In fact, Pharma, IT, they have been under pressure on the back of uncertainty surrounding tariffs. 1621, that's where the stock is at right now. But do you see, the stock breaking out of a range now after today's up move, or do you think it is expected to remain range bound or trade with a negative bias? And today is just, the up move today is just based on the news that has come out.
Nandita, I feel the up move may not sustain today because if you see the pharma index also in the last several weeks, the pharma index also is in a downtrend, lower top, lower bottom formations have been visible. The indices are sustaining below its 20-day exponential moving average on a daily scale also, and on a weekly scale also. Last 5-6 weeks, it has given that breakdown below that, and it was outperforming for the last entire. Say from the right from the period of March 2023 till December 2024, there was this outperformance. So a quarter or two of an underperformance in an index is quite okay after 5-6 quarters of outperformance, and that is the reason we are not seeing any bigger weakness here. But yes, this indices could continue to underperform, and with Donald Trump uncertainty related to the Trump policies, which sector could get impacted, and we have a lot of pharma exposure there to the US. So that is the reason I guess there is that bit of skepticism here in this sector. And I feel from an investment perspective, yes, the dips from here till 1500, 1550 should be utilized from a 3 to 5 year perspective. But from a trading perspective, the stock has to cross and sustain above 1650, 1660 for at least some kind of a bottom formation to get confirmed. So 1650, 1660 will be that first level from a trading perspective that I would be looking out for. And I still feel that there could be time, there could be some more consolidation that could be witnessed in this stock in the coming days and few weeks.
Okay, that's the view on Sun Pharma and of course the Pharma pack as well. But talking about Nestle India, the stock is trading with a negative bias, some bit of news flow. It is facing SEBI warning for insider trading norms violation by a senior official. The company of course sees no material impact on financial, operational and other activities. But Nestle is one stock that has managed to hold its ground. In fact, if you look at the YTD gains, it has managed to see a 3% uptick. Do you expect this up move or whatever the trend that is there, that has been there, to continue? And today, it's just, there's no big impact of this particular news flow. In fact, the stock is has already edged back into the green. From the FMCG pack, how is the Nestle looking like on the charts now?
Nandita, if you closely have a look at the stock of Nestle and the price action therein vis-a-vis the price action in the FMCG space, I need to understand one thing, that pharma index, FMCG index was already corrected around 28 to 30% from its peak. And while this particular stock is corrected only 20% from its peak. So in a way, there is this outperformance that is associated with this stock, and it's a credible stock. Now, fundamentally also, it's a decent stock to hold an MNC company. It's just that there's some headwind against this sector, and a lot of consumption related questions were raised. And that is the reason the entire FMCG pack has been down. But looking at this quality of the stock, I feel this is a must hold from a portfolio perspective. From a trading perspective, as of now, it's not giving any signals until and unless it is trading below this 2300, 2305 mark. I feel about 2300 zone, this stock could show a decent reversal up to 2600, 2700 in the next couple of quarters. So we have it's a level based trade here. 2300 would be the first level that I would be watching out for from a breakout perspective, and this could be a medium term trade and just not a trade for a couple of days. I feel it could be a 3 to 6 months trade, and the trajectory could improve once the stock sustains about 2300.
Okay, that's the view on Nestle, but I want to talk to you about a Gensol. Promoters, in fact, sold stake in the company days after assuring that they'll be buying shares from the market. In fact, on the 13th of March, there's a board meet slotted as well for Gensol, where it will consider multiple proposals, including a stock split and raising of funds. The stock has been under intense selling pressure. In fact, last 5 days itself, it has shaved off quite a sizable percentage from the stock. So, around 309, that's where the stock is. It's very close to its 52-week low as well. But do you expect, a fresh leg of major breakdown on the charts, or do you think worst of the sell-off is over? What are the charts saying? Is it already in oversold zone?
Nandita, such stocks where there are such news flow surrounding it, there's no definition of oversold and how far it could go or how steeper it could go, even in an oversold zone. So, one thing is that I would urge all the viewers, all the listeners to avoid these kind of names, at least when you are aware of something else which has come out now. So if someone had already bought and it's stuck at higher levels, yes, you could search for opportunities to exit this stock on a rise. But if it is from a fresh investment perspective, please avoid, because you've got a lot of better quality stocks, at least where your capital preservation could be taken care of. And that's what we all are trading and investing for a long term sustained wealth creation. And such stocks are wealth destruction stocks. And I feel one should avoid this. And looking at this chart now, there was a breakdown in the week, I guess 14th February. During that week, there was a breakdown below 700, and the stock is even corrected more than 60% post that in the last 3 to 4 weeks. So my sense is, please avoid this kind of counters for every listener. This stock could continue going down. It might be you might be there could be some news flow which could come from because of the management meet which is scheduled on 13. You might see some splits, bonuses, whatever the news flow come, and you 20-25% rise from the current levels also cannot be ruled out because of the oversold nature. But yes, the larger trajectory of this stock from a quarterly to a 6 monthly perspective would be on the downside. And I would not stick my neck out, or I would not do any bottom fishing here. Just let the stock sway away with its emotions and all the news flow, and let's give it a skip.
The view then. Another stock before we take up viewer queries, Neogen Chemicals. This stock is down almost 6% or so as we speak. It has cut its FY25 and FY26 revenue guidance after the fire at the Dahej plant. Standalone FY25 revenue guidance has been revised to 765 to 800 crore rupees, vis-a-vis 800 to 825. And for FY26, the revenue guidance has been revised to 775 to 850 crores, vis-a-vis 950 to 1000 crores. Now, the company, of course, has said that it will take further efforts to reinstate capacity faster. It will increase capacity at other locations as well to minimize the impact of fire. But Neogen Chemicals, any thoughts here? Are you particularly tracking this counter, because over the last 5 sessions the stock had done well, but of course on the back of the guidance cut we are seeing some bit of pressure. In the last 1 month as well, the stock has shaved off 20%, but after that we did see some buying interest, but that seems to be fizzling out now. How does one approach this stock?
Nandita, before this talk, I would just like to take 30 seconds from a mid-cap perspective. Now, a lot of mid-caps where we were seeing the stocks sustaining above their January, February 2022 highs, or those kind of average traded prices in Jan 2022, they're still looking good. And there are stocks which have broken down below 2, 3, 4 year lows, and they are looking extremely weak. So these are the two set of mid caps that we are looking at in this market. And if we have to place Neogen in that, the stock is just about breaking its that 2022 trading period, that zone. So I feel from a long-term standpoint, the stock is not broken down. The stock has just retested its prior breakout zone, and that is okay. Just a correction of around 25% from its all-time highs, wherein a lot of stocks have already corrected 50-60%. So in a way, yeah, we are seeing an outperformance here from a medium to long-term standpoint. Yes, the results have been weak. They have not been as per the expected numbers, and a lot of updates have come which is against the price action right now. But I guess that should settle in a couple of weeks' time. And on the downside now, 1600, 1620 will act as a strong base, strong support. We expect this support zone to hold, and we feel that we could see some consolidation between 1600 and 1800 thereon. And once the stock crosses and closes above 1800, there could be a bigger move up to 2100, 2200 on the cards. So this stock from a medium to long term perspective is a very good stock, but from a short term perspective can go and consolidate.
Sure. Sure. Let's quickly take up some queries then on that note. Sudeep, I want to take up a query on Bharat Dynamics. defense stocks have seen a good comeback. In fact, last week, if you see Bharat Dynamics, it has gained somewhere around 15% or thereabouts. Of course, the market also saw some bit of a recovery last week, but of course, Bharat Dynamics a 15% uptick. We have a query coming in from Naveen on this particular stock. Any levels or targets to watch out for here?
Nandita, if you see Bharat Dynamics, the stock has reversed from an important support zone which is closer to say 905, 910, and that was the same support zone from where in November 2024 also it had rebounded, and it rebounded back to 1250, 1300 levels. So I feel in the current run up also the stock has run up in the last 5 days from 1000 to 1150, 1160. It could retest 1100, 1120 zone, but yes, from that support zone till 1100 holds, we could see a pullback up to 1230, 1245 levels where the 200-day moving average is placed. And defense stocks look good, and in a way, out of the 8 to 10 defense stocks, 5 or 6 are looking extremely positive, signaling a positive market breadth for the entire sector also.
All right, that's the view on defense. But what about railways? We have another query on a RailTel from Mukund Yadav. He wants to know whether he should hold it for the long term. In the last 5 sessions, RailTel has gained somewhere around 7% or so. There's been an order win as well. And today as well, the stock is up and about almost 1% higher. Is it a hold now?
Yes, Nandita, it's a hold because after a correction of almost 50% from the all-time highs, I guess the stock is now trying to find its feet closer to 280 to 85 zone, marking that zone as a base support. And the last 5-6 sessions, we have seen a higher top, higher bottom formation. Today, the stock is just taking resistance at the 20-day exponential moving average, which is closer to 309, and that is exactly the high today. So it could consolidate between 285 and 310. And once the stock crosses and closes above 310, the next move could take the stock up to 340 on the upside. So continue to hold this. I guess it could consolidate, but
right.
From a longer term standpoint, it's a good stock.
Okay, RailTel good, looking good on the with a longer term perspective. Next query on a BSE from Karl Paruksha wants to know whether it's a buy or sell. Of course, BSE and other capital market plays have also come under intense selling pressure. In fact, the change in expiry day is another thing that had weighed in on the stock of BSE last week. Your thoughts after this correction? Is it a good buying candidate or is it a sell?
Nandita, not at all a buy candidate at this juncture because the sell-off that we had seen in the last week of February is just intensifying here, and I feel the zone from a reversal perspective, if one has to look at it, would be 4200. The stock now has to cross and sustain above 4200, 4250 at least for some kind of a bottom formation. We are very close to the 200-day moving average, which is around 3980, 3985 zone. So the stock has never retested this from August 2024 once it crossed 2500. So this is the first time this is a retest, and I feel 3950, 4000 zone will be an important support zone. But in case it breaks, a further fall up to 3500 could be on the cards. So no bottom fishing here. Wait for a reversal and we'll take a call accordingly.
Okay. All right, no bottom fishing here on BSE. That's the call. Last query then. I'll just bunch up a couple of queries together. There's one on the beverage space. Shweta Naidu wants to know your thoughts on Varun Beverages. She's bought it at 560. She wants to know whether she should average or exit. Another query on the beverages space is coming in, and this person wants to know which one is better placed for the medium term. United Spirits or Varun Beverages? Your thoughts on the entire beverage space and which stock is looking good now?
Nandita, if you see Varun Beverages, the stock is better placed than United Spirits. The extent of cut in United Spirits is kind of a bit steeper than Varun Beverages. And Varun Beverages in the last 5-6 sessions is attempting to have a reversal here. So overall, I feel 470 on the downside for Varun Beverages is an important support. And looking at the way the heat is increasing, all these AC stocks, the beverages stocks would do really well in the coming quarter or so. So I feel yes, Varun Beverages from the current level the viewer can average if bought higher at around 550, 560 levels, and hold it with a stop loss of 465 on the downside from a positional perspective.
Sure, that's the thought then on the beverage space. But very quickly, Sudeep, before I let you go, what are your recommendations for our viewers?
One stock that I like here from a medium term perspective is UPL. UPL is kind of giving a breakout on the upside right now. It's just trading around 625, 630 zone. A breakout is on the cards. Keep 616 as a stop loss on the downside, and I feel upside around 650, 665 zone could be witnessed here. And the second stock that I have on my radar is a reversal stock, a pullback stock, which is Tata Power. There's a lot of bottom formation activity that has already happened in the last 15 to 20 sessions between 360 and 336. And the stock is now ripe for a pullback from the current levels. Weekly charts also show that support zones are being held. A lot of buying support at lower levels is being witnessed. So 348 could act as a strong support. The stock could be bought with the stop loss of 348 for an upside target of 385, 390 in the coming few weeks.
Okay, Tata Power and UPL, two recommendations coming in from Sudeep. Sudeep, with that, thanks a lot for taking out time and joining in this morning. Always a pleasure, and I look forward to more interactions going forward.
Absolutely, Nandita. Thank you.
Thank you. Well, on that note, we are trading with a positive bias at the current juncture, but let me quickly bring on board our next guest for today, the big market voice, Ajay Bagga, market expert. Ajay, lovely having you here, and that too, on this Monday morning when the mood is pretty upbeat after the victory in the Champions Trophy. And the Bulls seem to be participating as well at the current juncture. But in the run-up to the match as well, we saw a good recovery in the market, 2% gain on the Nifty last week. We managed to outperform US pace of FIS sell-off as well has slowed down a bit. Would you still say it's too early to call this a trend reversal? Is this really a bear market according to you, or it's just a correction in a bull market?
I think it was a correction in a bull market, and we seem to be consolidating. Still, I would say the bottom is not in place. That will take some more time to be spent around these levels. What is the good news? Domestically, I think the economy bottomed out in September. Corporate earnings wise, corporate earnings bottomed out in December. We should see better numbers going from here. Third, the base effect will make the June and the September numbers for this year look much better. So we are having a benefit of a base effect. Fourth, RBI has started its easing. You see, they have done macroprudential easing in terms of reducing their credit weights on certain key loan categories. They've cut rates, expected to cut once more in April. Third, they are injecting liquidity as needed in the markets. That's very critical. Liquidity is like oxygen to the markets, and that helps the stock markets as well. Coming to global, I think it's mayhem, it's disruption going at warp speed. So we really don't know what will happen globally. Trump is following a cycle of threaten, then levy some tariffs, then roll back, again come back, and unexpectedly move forward or move back the dates for tariffs. There's retaliation going on. China has seen deflation in its consumer numbers, which is a little bit difficult given that last week the entire NPC in China, the focus was not on investment-led growth, but on consumption-led growth. And in that scenario, if you're seeing consumer inflation going in the negative number, deflation along with demographics, along with deleveraging that's needed in the property sector, it's a big challenge for the Chinese government as such.
Sure. You mentioned the China factor, but we've seen the metal pack outperforming significantly last week. One factor was the cooling off in the dollar index, and second was, of course, the fact that China had stuck to its 5% GDP target. How difficult would that be for China now that you've pointed out those, those factors? do you see these factors continuing to favor metals, or do you think it will be a difficult task for China to stick to that 5% GDP mark? So how does really one approach metals in the wake of all this news flow?
I would be very careful of metals, Nandita, because China, the biggest supplier, is going to see demand issues. On March 12th, 25% steel aluminum duties come on board in the US. So again, we don't have much of a stake there. 2.5 billion is what we really export to the US in terms of metals, and nearly $7 billion our players have put into US, especially the Birlas and the Jindals. They have put plants in the US after 2018. So minimum disruption. You have to play metals as a domestic play, which is a positive, but with a Chinese overhang. So even if we put countervailing duties, the budget actually brought down duties. And on the budget day, I had said, with this coming through and China expected to dump its excess capacity around the world, they might stamp it as Malaysian steel or Vietnamese aluminium, but it will find its way to India with a stamp of some other country where we might have an FTA also. So I would not be so optimistic on metals, even though a lot of foreign brokerages have put a buy and metals have outperformed the Nifty year to date. So that way, markets are voting with the money, but I would not be so sanguine on the metal bank.
Okay, approach the metal pack with caution then. Let's also talk about the other factor that you mentioned, that, the RBI has been tackling liquidity issue pretty well, so to say. Post the recent one, has the crisis really been diffused? Is the RBI managing the liquidity puzzle well under the new governor? And, in the wake of that, how are you, viewing the NBFC space in particular? Because we also had the risk weights being, brought back to 100% from 125%. How does this bode for the financial space?
Yeah, banks' exposure to these large NBFCs is massive, and reducing that risk weightage from 125% to 100 gives a big relief to banks on the capital front, allows them to lend more. And remember, banks will lever it up 8 to 9 times, 10 times, and then lend more money. So about 50,000 crores to 1 lakh crores has been released on the bank's credit risk book, and which can be levered up and lent to NBFCs again. So that's a big positive for those NBFCs. Their fund costs should come down, and overall we are positive on the NBFC sector.
All right. Another space that has been hogging the limelight is the entire cables and wires segment, right? Competition is heating up here as well. Ultratech looking to disrupt this space. First it was paints, now it's cables and wires. But just the mention of this fact, triggered a very sharp correction across players like Polycab, KEA Industries, etc. But that's still some time away. So post the recent correction, do you think these companies offer an attractive entry point now? The likes of Polycab, KEA Industries, how are you viewing this sector now?
I think we can wait. These sectors are commodity sectors. End of the day, they are plastics and metals put together and sold. There is very little brand differentiation, but they are getting a lot of brand premium in a commoditized space. So I would say I think there's further to fall with disruptive, deep-pocketed competitors come in. If a Birla is entering a space like this, it will be a well thought out strategy with a war chest to come out and disrupt the pricing and destroy the margins. So your margins are my opportunity in the classic playbook. What we have seen on the paints, again, it's playing on the cables and wires. So caution. I would say hyper competition destroys value. It creates value for the end consumer, but destroys value for the investor.
Okay, approach this space with caution as well. But do you approach the capital market plays as well with caution now? They have come under intense selling pressure. Look at exchanges, brokerages, depositories. All these stocks have seen, quite a sizable correction. Should one be cautious here as well, or do you think, post the correction, the valuations look a bit okay to get into?
I think 30-40% volumes are down with the prudential measures brought in by SEBI over the last year. And that means you are going to see less of revenues, less of revenue growth. And there's a big cohort, which is first-time investors over the last 5 years. They've seen a one-way market. So post-COVID, they've seen a one-way market, and we are seeing regrets on the SIP side. We are seeing volumes falling. So in that kind of a scenario, we have already given them next 5 years growth in terms of the multiples. Now there is a correction happening. How far is the correction to go? I think it will go on the other side. You will see more falls in that, because these were really overbid kind of sectors, and it was a play on the India consumption. I would play the India consumption on durables, on autos, and on FMCG, rather than through these financials. Financials, if you have to do for the well-capitalized private sector banks, I think they will be the top-notch performers.
Now, if I ask you to identify two sectors, that are ripe for bottom fishing right now, which ones would you suggest?
I think IT, because and I'll give you one example. The Chinese monetization post DeepSeek, the Chinese monetization of its IT sector. So the global capital is looking to move out of Magnificent Seven, looking for other areas to park. I would say the Chinese give a very glowing example. We don't have a DeepSeek in our IT segments, but the good news is they have finally launched, say a Topaz or an Azure or something. They are launching their AI packaged bundles, their end users, and offering that to customers. So, plus there's been a very rapid training of their bench in terms of AI offerings. So, I think now you're going to see our IT take off. The bottoming has happened. The stocks have underperformed. They're underloved, under-owned as well. I would say IT. And then second, the perennial favorite, but it's not a contrarian bet. It's a very center-of-plate bet, financials played through private sector banks. I think these two segments, you're pretty much okay in being. And then I think domestic and more defensive place might be the other place to hide because of the global issues. We don't know how far these global issues will play out. That is the thing.
All right, Ajay, would like to thank you for sharing your thoughts with us. Great insights as always. Wish we could have a longer conversation, but we can keep it for some other day. And I hope to see you soon again on the show.
Thank you. Thank you for having me. I'll be back as you need. I'll be back. Thank you.
Thank you. Thanks a lot. Well, on that note, quickly take a look at the market. We've seen a good, up move coming in at the current juncture. The Nifty is up almost 100 points. So we've cleared that 22,600 mark as we speak. The mid-cap index, although has cooled off a bit, so it's the benchmark that has taken the lead. Nifty up 0.5% vis-a-vis 0.3% kind of a gain on the Nifty mid-cap index. The Bank Nifty as well has edged back into the green. IndusInd Bank has managed to pare some of the losses that it saw at the open. It was down 5%, but it has cut its losses by half. So it's down 2.5% at the current juncture. Bajaj, M&M, Maruti, some of the auto names are out of favor, but what's really leading the up move as of now is the Bajaj twins, Bajaj Finance, Bajaj Finserv. Some of the capital goods names as well, and even the defense names like Bharat Electronics doing well. Metal names also doing well, Tata Steel, Hindalco, and some of the FMCG names like Hindustan Unilever also doing well. So yes, that's the texture, positive at the current juncture. Let's hope we managed to sustain these gains as we move through the day. But of course, I'll see you at closing bell at 3:30 p.m. Don't forget to tune in for that. Hopefully, we will be ending the day with green on the screen today as well. Thanks a lot for watching. Have a great day.